Hello, welcome to myfinanceteacher.org. Let's have a quick look at a range of markets today with you, and we'll start with some of the recent news for today. Looks like there are quite a few positive news for the stock market. Netflix is raising a lot of money. Intel is up a whole 5%. Wall Street gets very bullish on Netflix. There are some negative news, like AT&T misses revenue estimates. But so far it looks mostly positive, with Facebook expanding into Indian market. Amazon stocks rally. More aid is coming as the Senate is signing a bill helping small businesses. So it looks like the news are generally positive today, and compared to yesterday's close, S&P 500 is higher. However, we still see a small red candle. You might have noticed all of the positive news are about tech-related companies that might actually do well in a lockdown, as people are getting into Netflix subscriptions as they're sitting at home. I think I've seen a positive news on Nvidia as well. Nvidia might actually be doing well in a lockdown when people are getting into gaming and stuff like that. Amazon is clearly doing well with all the deliveries that you can purchase online. So far the earnings reports are looking fine, but for now it's mostly the companies that would do well in a lockdown anyway. So S&P at the moment isn't jumping up with all those earnings and stock prices of particular companies rallying. So the plan that I've described in the previous couple of videos stays intact. By the way, this video might be posted publicly on my YouTube channel with a significant delay once the information is hopelessly outdated. So if you're watching this on my YouTube channel and if you want timely updates on what's happening to the markets, you gotta do one thing. First, go to myfinanceteacher.org and sign up for timely updates. That's actually two things, isn't it? We're probably going to decline into a short-term daily cycle low on the S&P 500 over the next 1 or 2 weeks. One of the possible targets would be to retest these recent highs from the end of March, and that would be somewhere at about 2640 on S&P 500. And in my personal portfolio, for now, no change. The part of the portfolio that is allocated for the general stock markets is now fully in cash. But after a short-term decline, I still expect S&P 500 to continue rising, as this intermediate cycle has only been going on for about a month so far, which means although I'm fully in cash, I'm also looking out at an opportunity to get back into the stock market and at the same time maintain some caution, because I don't think we're going to see amazing gains. Next, looking at the dollar. Looks like we've started an intermediate cycle in the dollar here in early part of March. The intermediate cycles generally last for half a year or sometimes longer on the US dollar, and the daily cycles last for about a month and a half to 2 months. We're now 44 days since the beginning of the intermediate cycle, so we are possibly still within the same ongoing daily cycle in the US dollar, although there also might be a chance that we finished that daily cycle in the middle of April. It's hard to say at the moment because the volatility in dollar is declining and it's forming this symmetrical triangle or pennant formation. Look at the 14-day RSI, it's just turning into a flat line. Bollinger Bands are narrowing significantly, and usually this sort of decline in volatility with narrowing Bollinger Bands eventually leads to an explosion in volatility either on the upside or to the downside. The symmetrical triangles have basically an equal chance of the price breaking out on either direction. In this case, I think there is a possibly greater chance of the dollar breaking down. I would only give it a 55% chance breaking down rather than breaking up. And the reason for that is the negative correlation between the US dollar as a safe haven asset and S&P 500 since the end of March. As we see here, S&P 500 rising into the very end of March and cooling off into early April. US dollar is doing just the opposite, declining into very late March and increasing into early April. Another increase in S&P 500 into the middle and late April, with a decline going on at the moment, and just the opposite on US dollar, decline into the middle of April with a gradual increase at the moment. Now, if over the next 1 or 2 weeks we start a gradual rally in S&P 500, Possibly dollar will give us some sort of a breakout from this symmetrical triangle just into the regular duration of these daily cycle lows of around 2 months. Personally, I'm not trading currencies. I'm only looking at the US dollar in as far as it relates to gold. And over the last month or so, there seems to be some negative correlation between the US dollar and gold. Between 20th of March and today, we see this W formation on the US dollar. And in the same period, what we see on gold is a letter M. Although today we seem to be breaking that pattern with a nice green candle. So if dollar breaks down from this symmetrical triangle over the next, say, 1 or 2 weeks, that might help gold to propel higher. And I do expect gold to move much higher into the second short-term daily cycle within an ongoing intermediate cycle. It looks like so far this daily cycle in gold has been going on for just over 1 month. And I still have a target of 1650 for gold over the next several days, as usually these cycles last for 1.5 to 2 months. But we see a green candle today and we might break out early, making this short-term daily cycle relatively short. For now though, what I see on gold is this bull flag. Although gold might be on the verge of breaking out up from that bull flag, we don't see the breakout yet, and there is still a chance that over the next few days gold will revert back to the lower range of this bull flag and hit our target at about 1650 based on these recent lows at the end of March. However, although gold is somewhat lower than the recent high on the 14th of April, GDX is actually quite close to its high on the 14th of April. Although based on the regular duration of daily cycles, it looks like we might see a decline over the next 1 or 2 weeks. We also see that the volume doesn't seem to be confirming the uptrend of the GDX price. And over the next few days, I would really like to see GDX to retest, say, $28. That would be close enough to this 200-day moving average, close enough to the 50 and 20-day moving average, and also close enough to this March high. All of those support zones might give us a nice bounce up to break through that long-term resistance at $32. On the other hand, we are still very early in the ongoing intermediate cycle. The intermediate cycle should probably give us a top only in the next couple of months. So there is, I'd say, 40% chance that GDX just continues to push higher from here, breaking through $32, maybe retesting it over the next several days. That retest will actually give us a short-term cycle within the normal duration of, say, 1.5 months. And after that, we might see GDX push much higher. So my strategy at the moment is holding GDX and some particular selected gold miners in my personal portfolio with about 60% allocation, I would say. And as I mentioned in one of my recent videos, I stopped out of GLD at 159.59, I think it was. So I'm holding that 40% cash to add once gold either reaches this target of 1650 or breaks out of this bull flag. And although I'm looking at gold, and although I used to hold GLD with that 40% of the gold-related part of the portfolio, this time I might actually add more to my holdings of either miners or silver miners. As we've discussed in previous videos, as the intermediate cycle continues, as the investors become more confident, the capital might flow from gold itself into more volatile miners and maybe even silver. So I think over the next several days we should watch the precious metals market closely. Personally, I'm already 60% in and getting ready to allocate that remaining 40% as well. So that is my opinion. Let me know what do you think on the miners. Isn't it quite interesting? GDX is very close to breaking above $32. Do you think we're going to decline back to 200-day moving average? Or are we instead going to break through the resistance zone? For now, I wish you a nice day and good luck in your trades.